chairs are just sitting on right now.
Hello, everyone, and welcome to One Chair. As a reminder, none of what you will hear is financial advice, and this podcast is for entertainment and educational purposes only.
Hey, everyone. All right, happy new all-time highs. With that said, we will be talking a little bit of macro at the beginning of the episode, and we will then discuss some Bitcoin Treasury news. So let's just get started. Happy new all-time highs, Quentin.
Yes, happy new all-time highs. Yesterday, Bitcoin hitting $123,000 in Euro and CHF. We haven't seen an all-time high yet, but this is just a matter of time. But this shows how the dollar has underperformed over the last 6 months here, with an all-time high almost by 10% in dollar terms, but other currencies still not back to the January highs. So this can bring us right into our first slide of the day here, talking a bit of macro and also some reasons maybe why the dollar is so weak today.
Yeah, I think we can start by describing a little bit what we see on the chart here. You see the US public debt, right, from 1901 to basically 2036. So there's also a bit of a projection here. And we thought that was interesting because you just see, it's a hockey stick for our listeners, right? There's no other way of putting it. So you see that we're currently sitting at about 36, 37 trillion as of right now of public debt. And right now the projection is 51 trillion by 2032. So this is a chart from Bank of America. Yeah, I mean, it's the trend is clear, right?
Yeah, exactly. And as Lynn Alden says so accurately, nothing stops this train, referring to the Breaking Bad episode here, but talking about the way that the deficit and the debt of the US specifically, but of most countries in the world, is just accelerating. And you can see that here. It's basically an exponential curve with no end in sight of the debt. We saw the big, beautiful bill being passed in the US by an administration that originally has been very vocal about trying to reduce the deficit, and they have talked about it during the election, but they also started their administration with Doge, trying to cut spending, and still with that, with the administration that has been the most vocal about it so far in the US, we see within the first 6 months an increase in the debt ceiling by 5 trillion. Yeah, it doesn't seem like there's a way for them either to have enough votes to get through a more austerity within the government spending. It's good for Bitcoin, but it's a trend that is quite scary if you look at it not only from a Bitcoin perspective, right? And I think here the Ray Dalio has a good view of looking at that. He's also seeing this debt exploding, and he sees really 3 potential ways for a government to stop that. And the first one is austerity, so spending less. But this is something that is really unpopular, and it doesn't get you elected as a politician to cutting spending, because every district and every state wants to have more invested into them and to get more out of the people that they vote for. So this is something that doesn't really get you a majority of votes. Then the second possibility would be increased taxes or increased revenues. But this is also a political suicide to promote this, and that's why also no politician will ever go for higher taxes across the board to reduce the deficit. And the third one is the one that is the least painful for the government, but because it's kind of a hidden tax. It's basically inflation and the debasement of the currency and paying back your debt. But the debt is worth a lot less than what you borrowed it at originally, because you devalued the currency. And historically, Dalio points out that this is the way that every government since the beginning of time has always gone with, because it's the least painful for them, and the least visible as well for the population. So it looks like the only way out of this will be debasement of the US dollar.
Yeah, I mean, when you start looking at the figures, it's very clear which path they're taking. In my opinion, there's just one choice as of right now. I think the other part is exactly this issue is already seen throughout society overall, right? Maybe we can quickly go into this discussion as well, is all the speculative mania that we've seen over the last few years on different fronts. I'm mainly thinking about all the altcoins back in 2017 and last year, for example, on the meme coins, right? These, in my opinion, are clear indicators of fiat dying, basically, right? It's pure speculative mania that is driven because people don't know where to park their money, and driven by actually an additional of liquidity that doesn't know where to go. Luckily, there's Bitcoin, and we've seen quite a bit of liquidity flow into it, but there's other pockets that are putting their money on other speculative assets. I think what we will see as well on the Bitcoin Treasury company, if we go back to this topic, is that we will see also, or we're already seeing some treasury companies being built on different altcoins. So we've seen a couple of ETH and Solanas and so on, and there's probably going to be more throughout. And again, I think these are companies that don't know where to park their additional cash. They haven't probably done their full due diligence on these assets, or maybe they're speculating on it. And it's going to be quite wild to see that this trend is also coming over to the TradFi world, right? All right, so maybe just to get back into our initial discussion of the US debt, maybe we can transition into the next slide, showing actually that the state of it is way worse than what we think. And I don't know, maybe Quentin, you want to guide us through this slide?
Yeah, sure. So on the first one, we saw the public debt of the US increasing, now the debt ceiling of 41 trillion. But if you look at all of the unfunded liabilities that the US has, this picture is actually a lot worse. And so we have here an overview showing, it's a source from the OASDI from 2023. According to this, it shows that the actual liabilities of the US is more around 175 trillion and not the 41 that we saw. This is including all of the state debt as well, but also the unfunded liabilities for social insurance programs like Social Security, Medicare, and other entitlements. This shows that overall, the picture is actually a lot worse, and it will be difficult for the US to get out of this without significantly devaluing the US dollar. And it's something that we have seen now over the first 6 months of the year, with the dollar being devalued, but this will probably only accelerate from here if they don't find a way to grow out of it or significantly reduce the spending. And this transitions me now to the next slide, which we have prepared here, which shows the global money supply. This is worldwide now, not only US. This is a chart showing the correlation between Bitcoin and the global M2 money supply from 2023 to today. And the global money supply is a 12-week lead. So basically, it's forecasting the price of Bitcoin. And when you see this 12-week lead M2 supply compared to Bitcoin, it is correlated almost perfectly over the last 2 years here. And it actually, following this, you could have predicted the peak in January of 110,000 per Bitcoin, and then also the crash down to 70,000, and now also the recovery back from 70 to the 120 that we have now. So it's super interesting. Let's see how long this correlation here holds up, because every model at some point is broken, right? But so far it has been astounding how correlated those two charts are. But the interesting point here, especially on the M2 money supply, is who is currently driving this increase in global money supply. And we've talked about the US and how dire their situation is. But surprisingly enough, it's not driven mainly by the US that we're seeing this high increase here in supply. It's mainly driven by China, which has a growing M2 supply of over 8% over the last quarter. This combined with a weaker dollar, because the M2 supply is denominated in dollars, gives you this high increase. And compared to that, the US is only at around 4% year-over-year increase, and the Eurozone and Japan, surprisingly enough, is only a minor contributor to this current M2 money supply increase. So there's still a lot of room to run, especially once the US also starts to be a main driver in this. This will probably increase a lot farther, but just seeing what this is coming out of China today, this does forecast the Bitcoin price more around 160,000 if the correlation continues to be as tight as it's been so far.
Yeah, no, great. I mean, you hit the nail right on the head, right? And maybe just to recap the last 3 slides. So we started with the US debt at 36 trillion. Then we showed you that the whole situation is even more dire when you look at the whole of US, right? So federal plus states, or we sit somewhere more on the 175 trillion. And now we're telling you that the US is not even driving this. So if you're not bullish on Bitcoin, I don't know what to tell you.
Yeah, and maybe just to add to this correlation, we'll flash up here another slide for a few seconds. Here is the same picture that you see, the correlation, but going back to 2013. And it's basically showing the Bitcoin price on the y-axis and the global liquidity on the x-axis, and you see that the correlation has been going back over 10 years. Has been quite strong, with around 90% correlation between the money supply and the Bitcoin price. So it's not a new phenomenon that we have this close correlation, but it is true that over the last 2 years especially, it has followed each other almost perfectly.
Yeah, no, great. Again, hitting the nail right on the head. So what is clear is that not only individuals, but also, as we've seen lately, companies and nation states will have to adopt Bitcoin, right, if they want to get out of this. And it's a clear trend that we've seen over the last 1.5 years now. And probably that's a great transition now to go one step lower and look at, again, our Bitcoin Treasury companies. And so here what we're presenting is the chart of the accumulated Bitcoin by public companies going back from 2020 all the way to today. You see a clear trend that the accumulation is speeding up, right? So you go from basically something like close to zero of Bitcoin from July 2020 to almost 800,000 Bitcoin accumulated by these companies. I think the trend is clear, but it's also quite interesting to see that the main driver of this is strategy, right? Because the accumulation starts more or less in August 2020, when Saylor announced their first buy for MicroStrategy back then. All the main buys are driven by strategy, starting from, again, December 2024, when they announced their 42 billion plan back in the day. Even now, if we think of 800,000 Bitcoin, 600,000 are already in the pockets of strategy, right? So that leaves us 200,000 more or less that are sitting in other public traded companies. So there's a lot of room to run. I think that's one clear message is clearly there's one leader strategy, and there's obviously a bunch of other Bitcoin Treasury companies, but they're actually being a smaller part of it, right? One other thing that I think is interesting is, due to this head start, strategy has been running away, meaning that even if you think of all the buys that happened last week, let's say MetaPlanet 800, SQNS 1000, and then a few others with a few hundreds here and there, even their accumulated Bitcoin purchase is probably not as high as strategies, right? They bought another 4,200 Bitcoin basically. So they're taking a bigger leap every time that they buy compared to the other companies. And clearly, I think that gap is going to widen over time. So that's maybe another thing that I take from this chart as well, actually, when I start looking at it.
Yeah, exactly. I think this really shows the huge advantage that strategy has over all the other Bitcoin treasury companies that are just starting off now. And as you mentioned, Metaplanet has been super aggressive in their purchases, but even they are losing the race against Strategy, who is just accumulating at such a fast pace. And at this point, the only companies that would be able to compete with Strategy is if one of the Max 7 starts to aggressively put billions and billions of dollars into Bitcoin. Otherwise, there's no way that anyone is going to come close to Strategy. This is quite impressive, and we'll go into a bit more details here later in the show on their weekly purchases again this week that were so impressive. But just looking at this chart, as you mentioned, more than 80% of it is Strategy alone. And I think what's also interesting to see here is from the big increase that has happened at the end of 2024 up until now. We have quite an acceleration of public companies accumulating Bitcoin, but again, mostly driven by Strategy here. And what you see is that the price of Bitcoin in black here has been quite stable from January to now, so for the first half of the year, while this accumulation has been very aggressive. And this shows that there's also a rotation towards those public companies. But for every buyer, there must be a seller, right? And that's, I think, what we've seen here over the last 6 months is a lot of distribution from early Bitcoiners or big whales from prior cycles that are taking profits. And those Bitcoins rotating into public companies. And it remains to be seen how diamond-handed those companies are. But we know that the biggest one being Strategy, but also one of the more aggressive ones, Metaplanet, at least from their communication, is they will never sell their Bitcoins, right? So it's also probably a rotation of those coins to even stronger hands than held them before. And this might be also some additional fuel for future runs, right? With less and less supply being available because those treasury companies will not part with their Bitcoin.
And I think one additional thing that comes to mind when I look at this is exactly that. Okay, you mentioned exactly that the price has been fairly stable. We did see quite an interesting run over the last week and the weekend, right? Going all the way to 123,000. And that's where you see, right, when we run, I think it's going to be in those deeps. So it's not going to be soft. It's going to be quite volatile. And I think here you see that the buys from Strategy are starting to make a difference, right? When Strategy buys those 4,000 Bitcoin per week or more or less, obviously people get bored. You don't see them so much in the news anymore. But they start to pile on, and I think the sellers are wearing thin here as well. So it's going to be quite interesting to see the next price actions that will happen with these buys.
Yeah, let's see how aggressive they can remain and how much cash they are able to continue to raise. Let's go right into the discussion now on what happened with Strategy over the last week. I think one thing we need to mention, we were wrong again in last week's podcast with the blackout period. We mentioned that Strategy would not be able to accumulate any more Bitcoin until they have their earnings call, and this is false. As we've seen this week, that they were able to accumulate more. So it's they just stopped apparently for 1 week while they were building their earnings report and calculating their exact gains for the quarter. They stopped accumulating to have a clear picture of what they have at the end of the quarter. And now they're continuing, and they're doing so in a strong way, as we can see here on the next one, with common ATM being hit over the week with 330 million in net proceeds. And more interestingly, on all the preferreds, on all of them, they have a record week of issuances, with Strike at 71 million, Strife at 55 million, and Stride with 15 million. So this gives them an overall proceeds from their ATM operations over the last week of 472 million, with which they bought around 4,200 Bitcoins. So as you mentioned before, this is more than all the other treasury companies combined, and it really shows the strength and the massive lead of strategy here. And just to put that into perspective, I think we're getting used to those numbers, and 1 billion buy here, 500 million there, and it's just massive. And I think we shouldn't take that for granted what they're doing. And just to put those numbers a bit in perspective, we had strategy can only issue those shares while the market is open. And over the last week, the market was open for 32 and a half hours. And this means if you calculate back that they were able to raise $14.5 million per hour while the market was open, or this is 240,000 per minute. And this translates to around 2 Bitcoin per minute that they are buying while the market is open with their operations. And the crazy part about it is they don't increase their debt ratio with that. They're actually decreasing it. They're now down to 16% asset to debt ratio, because with all of the purchases, they're increasing the strength of their balance sheet and decreasing their leverage ratio. So this is just crazy to think about the amount of Bitcoin they're able to buy week after week, and while strengthening their financial position.
And even when they add leverage, right, when they issue those preferred shares, they're also actually adding on the asset side, right? So and with the Bitcoin price increasing right now, that means that their balance sheet is also strengthening with those preferred shares actually. This gets a bit mind-numbing because of, as you mentioned, the numbers are so big, we don't realize how big those are. And I think people don't appreciate the magnitude of what's going on.
Yeah.
And it's just crazy to think about it when you really start digging into the numbers and putting and adding all those zeros behind those numbers. Because if we look at our slide right here, everything is measured in millions, and it doesn't look that big, right? You see the little dollar sign, and then you have 2-3 numbers behind it. But if you actually start putting the zeros behind, I think that's where people might want to get a closer look.
And another way to look at it is in terms of the daily issuances of new Bitcoin, right? Because we have within the Bitcoin market, we have natural sellers, which are the miners that need to fund their operations. It costs a lot for them to mine the Bitcoin, to pay for the electricity, to mine those Bitcoin, and they have to sell part or all of their proceeds to fund their business. So that's the natural sellers in the market. And strategy alone has purchased more Bitcoin last week than all of the new Bitcoins that were created. It's actually the 1.3 times the total amount of new Bitcoin mined was bought by strategy just last week. And this just shows that, yeah, I mean, the price has to go up if this continues, because there's just the strategy alone, one company alone is absorbing all of the mined Bitcoin, more than all of the mined Bitcoin, which means that they have to go onto the market and find a price at which other holders are willing to part with their Bitcoin. Right. And at the same time, we're seeing the ETFs with record inflows. We're seeing the other companies that are adopting Strategy's playbook, and probably hundreds of thousands of individuals also stacking Bitcoin week after week. And there's just not enough to go around. And this supply shock is probably going to get worse and worse.
Yeah, and maybe just to come back on one of your comments that you mentioned earlier, right? Mentioning that only one of the Mag 7 would probably be a competitor for strategy. But I think at this stage, it's actually even too late, because if they start accumulating, the price is just going to start running away from them. And with that, they're going to have to start acquiring Bitcoin at prices that probably we can't even fathom yet. So in my opinion, strategy is already the clear winner. The only way that this would happen is either if a Max 7 starts accumulating discretely, which I'm not even sure how they would do it. So that's one way. The other would be a nation state starting to accumulate as well, right? A big nation state, not even a small one, because strategy is already bigger than most countries. So there's these are the two probable ways that strategy would not keep their huge moat, but at this stage it's highly unlikely.
Yes, I agree, and it will of course depend on the available supply. And what has been surprising, at least to me a bit, is how much supply there was now over the first half of the year. It looks like this 100,000 psychological barrier was really a point where a lot of Bitcoiners were willing to part with their Bitcoin. That's why the companies, as we've seen in the slide before, were able to accumulate so many Bitcoin over the last 6 months without the price really running away from them. We'll see how this evolves, but I also think there's not that much supply left to continue having a quite stable price for the amount of buying that is happening. That is really mind-blowing for now.
Yeah, exactly. And then if you just start to think about also the ETF inflows, right, that are happening on the side, something that we haven't mentioned yet, but these ones are also quite spectacular. They're probably on the same order of magnitude as strategy, the bigger ones, I think BlackRock. And suddenly, like obviously you will see the price run eventually, and it's not going to be just a rocket. We're just going to teleport, I think.
Yeah, there I'm not 100% sure how to look at the ETFs inflows, because I don't know how diamond-handed ETF buyers are. At the end of the day, are they looking for a 10% appreciation and then selling again? Or, with the Bitcoin Treasury companies, I'm quite confident that the strategy will never sell. And as we've talked about it a lot prior on the show, there's no margin call. There won't be a forced buyer. Maybe some smaller Bitcoin Treasury companies will be forced buyers at some point, but not the big ones like Strategy. And so the Bitcoin that they buy, the 4,000 they bought last week, they're gone. They're not coming back on the market. For the ETFs, I'm not so sure.
Yeah, that's a good point. I mean, probably ETFs are not as diamond-handed as Bitcoin Treasury companies, for sure. One thing's for sure is that we currently have a trend of inflows, right? And let's see how that persists over the next half a year to a year. But currently, inflows are still quite stable, right?
Yeah. And we've seen the inflow since, I mean, we don't have those instruments on the market for long. I think they were, what was it, February 24, the ETFs approval.
Like that.
So a bit more than a year. But what we've seen so far is when Bitcoin goes up, the flows into the ETFs also goes up. But in the crash we had from 100,000 to 70K, we also saw a lot of outflows from the ETFs at that time. So it looks like, at least so far, the ETF flows are moving with the price of Bitcoin. So they're accelerating the upside, but also accelerating the downsides.
Yeah, no, absolutely agree.
Should we switch gears and talk about the preferred specifically?
Yeah, let's do that.
Back to our favorite topic. So previously we showed the ATM issuances for the week. Before we go into more detail there, this slide here is super interesting, showing the liquidity of the preferred shares from Strategy if you compare them to the rest of the preferred markets. So all of the preferred shares offered since 2015 compared to those three instruments from Strategy that were issued this year. And the bottom line here is the trading volume and liquidity on those Strategy preferred shares are just orders of magnitude higher than all of the other preferreds that exist. And this is very interesting to see. And this shows that they will have a lot of opportunities to hit the ATM and issue more of those, because the higher the liquidity and trading volume on those, the more they are able to issue additional shares without impacting the price too much, right? And this is kind of what we're seeing happening week after week. If we look at the ATM proceeds since those preferreds were issued, you can see a trend of higher and higher volumes being issued, with the last week being a record issuance for both Strike and Strife, and the third Stride ATM issuances as well. So
yeah, no, it was nice to see on the last issuance that all four gears were on full throttle. Maybe just coming back to this slide, what is also interesting is you see that Stride is quite ahead of STRF and STRK on the daily trading volume. That's very simply because strategy issued a lot more STRD preferred shares than STRF and STRK. But that also shows me that STRF and STRK have a lot of room to grow, right? As the ATM keeps churning, you should see those volumes actually increase as well. So I'm really looking forward to see a future slide with the new volumes in a quarter's time. And I'm pretty sure those trading volumes will be sitting somewhere closer to 100 million probably.
yeah, and as those preferreds ramp up, the need for strategy to issue the common ATM will be reduced, right? We're seeing that last week still 2/3 of the proceeds from ATM was the common stock. And they will have to rely on the common stock less and less as the liquidity gets deeper on those preferreds, and they're able to issue more of those.
Yeah, I think that's an interesting point, because obviously, yeah, as long as the Bitcoin price keeps steady or increasing, I think that makes sense. On the other hand, you should also think of the leverage ratio, right? If you're hitting the ATM on all three preferreds and then you start having high volumes, obviously you can hit the ATM harder. But to keep a proper leverage ratio, then you might have to keep turning the MSTR ATM as well. And I think that's actually a big point of discussion, right? Whether to keep hitting the ATM on MSTR or not. And I don't know what you think, but I think hitting the ATM on MSTR still makes sense in order to keep this leverage ratio on a decent level, and also to keep accumulating Bitcoin at lower prices. Because as we've seen now, the price, if it starts running, it might run very quickly, right? So accumulating at this stage, I think makes sense.
Yeah, I think it does currently. There's two aspects to it, right? On the one hand, it allows them to purchase additional Bitcoin at today's prices. The MNAV is currently a bit below 2, so it is still quite accretive to the common shareholder to issue shares at the market. On the other hand, it's also dampening the price appreciation of the common stock, right? The more they issue, the less the price can run, and which means that also the MNAV is staying a bit compressed while they issue more of the common stock. So there's two sides to it. I think to be well prepared for a potential bear market, it makes sense now to keep the leverage ratio as low as possible. But it is lower than their own formulated target. As I said, they're at 16% now, and they plan to be between 20 and 30%. So they would have actually to increase their debt levels to be within their target range here.
Maybe just to add one thing here on your points, I think you mentioned it very well, right? What happens in a bear market? And I think that's the thing that's always in our minds, this famous bear market. Because if the leverage ratio right now is around, as you mentioned, 16%, right? And the Bitcoin price suddenly starts going down, then obviously this leverage ratio might also increase. So if you want to keep hitting the ATM on those preferred shares, the leverage ratio should stay rather on the low side. So I think that's why keeping a leverage ratio of 16% still makes sense. Maybe they could actually increase it a little bit, but not too much, because in a bear market, everything's compressed downwards. So your leverage ratio will increase. And so if you're already at your 30 or 40% leverage ratio, do you really want to keep hitting the ATM on the preferreds? That's going to be the the bottleneck, I would say, if that happens, right?
And currently, it doesn't look like it's harming the stock price too much, the ATM issuances that they're doing, because also last week the stock was up more than 10%, I think, over the week, while they issued 330 million of common stock. So it's going up anyway.
I think the execution so far has been, at least in my opinion, meticulous and well thought out. I know it's not perceived by everybody the same way, but at least that's how I see it. All right, maybe we can quickly go into the next slide, which shows the evolution of the ATM on the preferred shares since their inception. And maybe just to give credit again to Chris Milles for this picture. Make sure to follow him on X. He provides some pretty detailed and some pretty insightful charts. Here we see the proceeds of each ATM for the different preferred equities, meaning STRK, STRF, and STRD. Maybe just to stay on a higher level, I think the trend is clear, right? You see an increase of those ATMs over time, right?
Exactly. And again, this is the flywheel within the flywheel with those preferreds, because if you think about it now, as Bitcoin's price increases, the credit worthiness of strategy increases with it, and those preferreds become less risky. And being less risky, and with the dividends that they pay out, the price is moving higher on those preferreds, which allows strategy to hit the ATM and issue more of those shares. And this makes the price then go down because there's more issuances, but those are being bought up again because then the yield gets more attractive on them and they find more buyers for them. And again, this combined with the ATM issuances on the common stock, and anytime they buy more Bitcoin with common stock issuances, it increases how attractive those preferreds are because they're higher in the capital stack. And so it's reinforcing the preferreds. And also, if you look within the preferreds, for every stride issuance that they have and the Bitcoin they buy with that, they're increasing the attractivity of Strife and Strike. And Strike issuances is increasing the Strife attractivity. So it's really self-reinforcing, and it's super interesting what is happening here.
Yeah, I think we still haven't wrapped our heads around every detail of this concept, right? I'm actually not even sure if Saylor and Fong Li and the strategy team has completely realized what they've started doing, right? It's interesting to see this evolution, and they regularly admit that they're also learning throughout this evolution what is happening, and they're able to build on top of it. So great credit to them to be able to come up with these creative and ingenious ways of stacking new concepts on top of the other ones that are self-reinforcing, as you mentioned.
Okay, so I think that was it for the week on strategy. Again, super interesting what is happening on a weekly basis there, but we also want to leave some room for discussions about other Bitcoin Treasury companies. And we decided this week on one that just came out with some interesting news over the last week with Sequence, that are partnered with Swan. So Eve, if you want to take it away on that one.
Yeah, sure. So, yeah, as you mentioned, Sequence came up and now they're operating. So they initially raised 384 million USDs, so about 195 million in equity and 189 million in convertibles to raise Bitcoin as part of their Bitcoin treasury strategy. Knowing that Sequence is actually a French company that operates on the whole chips sector, so they're a bit like NVIDIA, they're designing chips originally. It seems like they're going for a dual strategy, so similar to Samler, right? So they're keeping their profitable business on the chip side, and they're gonna be also accumulating Bitcoin and leveraging to accumulate further Bitcoin. So far, they seem to have done a pretty good job because the announcement came, I think, sometime in June, and we're mid-July and they're already operating, right? So in my opinion, they're already ahead of 21 Capital Strive, and all these announcements that came somewhere between May and June, they already had their two first purchases. So their initial purchase was 370 Bitcoin. And their second one was, actually they announced it on Monday, 683 Bitcoin. So they're having some pretty intense yield, Bitcoin yield on their side. And I think their strategy seems to be quite interesting because they understand the play, right? They started with a small pot of Bitcoin, and now thanks to it, they actually have a pretty interesting Bitcoin yield, and they still have some cash to keep ramping this up, right? And unlike a 21 Capital who starts with 40,000 Bitcoin, and they're going to probably have this issue that because they're so big, they're not going to be able to have those Bitcoin yields that you have as smaller companies, right? That we've seen, for example, with a Smarter Web company or initially a Meta Planet, right? So they're building up their stack in a very smart way, in my opinion. Obviously, partnering with Swan, you can see that they have the expertise needed to do the Bitcoin Treasury strategy. And I'm really curious what they come up with next, because what I would love to see now from their side is more this transparency, right? So obviously they are communicating to the market. Seems like any other Bitcoin Treasury company on a Monday, how many Bitcoin they stacked, which is great. But I would also love to see a bit more like the metrics, and also, as Dylan mentioned, calling their shots in advance. So being able to let us know what's coming, right? Because as far as I know, they still don't have an ATM facility, although they're traded on the New York Stock Exchange. So they should be able to come up with one fairly soon. So really curious to see what they come up next. But it looks like it's going to be an interesting one to watch. And yeah, we'll for sure keep you updated on everything related to Sequence in the future episodes if there are some news.
Yeah, definitely. And interesting to see those companies to keep coming up with additional Bitcoin purchases and more companies to do so. Yeah, let's see how it keeps evolving this year.
All right. So maybe just to wrap it up, let's go briefly to final thoughts.
Okay, so from my end, I'll just get back to the overall market situation on Bitcoin. We talked about it, the massive purchases from strategy alone, but you combine that with the higher and higher ETF inflows, with all those additional companies currently also accumulating Bitcoin, and the interest probably, while still being low today from retail, will probably pick up as well as the price starts to move. Now we have seen some quite big moves over the last week, and if this keeps going, we will also have Bitcoin more and more in the news again, and the potential retail flowing back into it as well. And this is kind of the perfect storm here brewing with this resistance level that probably broke now with this psychological level around 100,000, and OG Bitcoiners taking profits and running out of coins probably now with the moves that we're seeing. So if those treasury companies can continue their accumulating with such strength and especially strategy, again, they currently buy more than the weekly issuances of new Bitcoin, then we're really set up for a continued run here, and will be interesting to see how this evolves.
So from my end, just to piggyback on what you're saying, right? I think the whole macro landscape is just shaping and to provide us with the perfect storm to see this Bitcoin bull run continue for quite some time. It's going to be interesting to see if we get those cycles that we previously got, meaning the 70 or 80% downturns. I'm not quite sure we're going to see anything like it anymore, but obviously with Bitcoin, you never know. Again, with the addition of the Bitcoin treasury companies, and again, mainly strategy, I think people need to start really paying attention to the numbers. I think nobody, even us, we're not realizing what's happening here with the amounts that are being pushed and shoved into Bitcoin. And obviously, at some point, the price has to start moving. And with the exhaustion of sellers, as you already pointed out, yeah, higher, as Jeff Walton would say. Great. Thanks for listening, and see you on the next one. Cheers.
Bye-bye, everybody. See you next time.
How many chairs are you sitting on right now?